Welcome back to the Dorian Finance Podcast. If you're new to my podcast, it's about finance, business, and much more. Topics today: what happens to the stock market if Trump wins or if Biden wins? How stocks perform in election years? How to invest in the stock market. I'm Dorian, and I'm thrilled to be your guide on your path to financial freedom. Let's start out right by you following my podcast. It's not what you do that makes you rich, but how you do it that makes you rich. What happens to the stock market if Trump wins or if Biden wins? My last podcast was Trump versus Biden presidential election. That's an interesting topic that I discussed how they do in leadership, economic stability, international security, diplomacy, and international relations, social justice, healthcare, education improvement, infrastructure improvement, collaboration with Congress for bipartisan solutions. I also had my very first podcast was how presidential elections affect the stock market, which I will go back over that a bit, but I feel like that one's also a good listen to as well. I also have a podcast on what stocks to buy during a recession. All three of those podcasts are good listens to for this topic as well. Now, if President Biden wins, you would basically have the same stuff that's happening right now happen. What stocks would benefit from that would be healthcare and utilities. If President Trump wins, you can see the energy and oil and gas stocks will benefit from that. But what will happen is President Trump will allow for them to increase their supply, which will also increase. When you increase the supply, the price goes down, so it's better for us, the consumer, but it will lower the price of gas, oil, and energy, which will help the economy. Also, President Trump will reinitiate his tax cuts that he did, which will help U.S. banks and the technology companies and also crypto as well. So that's really the what ifs and what sectors will be affected and which sectors will be improved upon which president will be elected or not. From observing the stock market during both President Trump's term and President Biden's terms, I believe that you can make money investing in the stock market with either one in the White House. You have to adjust your playbook and investment strategy around which one wins or not. If President Biden wins, you have to be more conservative and buy more defensive stocks. Just like what I discussed in my podcast episode 12, if President Trump wins, he will open up tax cuts and allow oil to be drilled easier, so you can be more optimistic in your stock market strategies. Moving on to how stocks perform during election years. Stock market performance during election years can be influenced by a variety of factors, including economic conditions, political expectations, and investor sentiment. While there's no consistent pattern that holds true for every election year, some historic trends and observations are market volatility. Election years can experience increased market volatility as investors react to uncertainty surrounding the political possibilities and changes that are being made. Pre-election jitters. Investors may become cautious and hold off on making significant investment decisions in the months leading up to the election, waiting for more clarity on the political direction that's coming into the administration, post-election rallies or corrections. The stock market reacts after the election may vary. There have been instances of post-election rallies when investors gain confidence in the new administration policies. An example of that was Trump versus Clinton, where when he was elected president, the stocks of Home Depot and Lowe's went skyrocketing because of the hopes of the infrastructure improvements that President Trump was talking about during his election and also the Mexico wall that he kept on promising as well. Literally, if you bought Home Depot or Lowe's or both 2 weeks before the announcement that he won came out, you would have made an easy 30% on your money at that time. Different sectors may respond differently to election outcomes based on political expectations. For example, sectors related to infrastructure, healthcare, and clean energy may experience changes based on the winning candidate proposed policies. Now let's get back into the year running up to the announcement of who wins. Traditionally, the stock market tends to perform well in the year leading up to the presidential election. The overall health of the economy plays a significant role in the stock market performance. The economic conditions such as the GDP, gross domestic products, growth, employment rate, inflation can impact market trends during the election year. Investors should approach the election year with a diversified and long-term investment strategy. Attempting to time the market based on solely the election outcome can be challenging, and it is critical to consider a range of factors that may impact the broader economic conditions. Moving on to the next subject, which is how to invest in the stock market. First, the takeaways. Investing in the stock market means buying shares of ownership in a publicly traded company. Those shares are called stocks. If a stock you own becomes more valuable, you can earn a profit if you decide to sell it to another investor. The same is true if you own a stock that becomes less valuable, and you will lose money when you decide to sell it at a loss. Now, when you invest in a stock, you're hoping for the company to grow and perform well over time. That's how you end up making money. For beginners to learn how to invest in the stock market is to put money into an online investment account or brokerage account and then purchase a stock from there. You don't have to have a lot of money to start investing. Many brokerage accounts allow you to open them up for $0. They don't have annual fee or monthly fee, or you shouldn't be paying for that at this moment. Then some brokerage accounts allow for paper trading, which lets you learn how to buy and sell with a stock market simulation before you start investing with your real money. Now, some bullet points you want to keep in mind is having a mindset that I'm learning right now. Some of you went to college for a 4-year degree. During those 4 years, you were paying money every single semester and making no return on it. So have that as your mindset that I'm in college right now. 4 years, I'm not making any money, so I'm learning right now. And then you also have to have risk management where you have to have in your mind, how much am I willing to lose before I throw away a stock, which is you're selling the losers. And for me, I personally have a high tolerance, but they have to have a reason for the loss and a reason for them to increase in value. And then I set a budget for the money that I'm going to spend in the stock market, and then focus on investing for the long term, which is your retirement. This is what your money is for retirement, or you can use it as a down payment on a house, or just straight up buy a house, or a vacation. And then you need to manage your stock portfolio by researching the company, researching how are they going to improve, how are they going to make more money, how are they going to destroy their competition and expand, and that's all research. You may have a stock that did very well for 1 year, and then it totally became a dog that you needed to throw away. For example, that was General Electric for me, where I bought it for $30 and it went up quite a bit and I liked it. I was getting a dividend and then it started going down. I was like, what the heck? And I'm like, this is a very old company, is well established. It should stay up. What the heck? As I lost more money, I decided on selling at 30% loss, which I'm glad I did, because now that stock that I bought for $30 is now at $10, and I made sure to get out of it before it was at that price. So that is managing your portfolio, managing your losers, managing your winners, and also having the mindset that I am learning. And whenever you make a mistake, you ask yourself, what happened and how can I avoid that in the future? The bottom line is, you're learning how to invest in the stock market can be a very big challenge at the beginning. But what other way is there to grow well? Now, my YouTube and TikTok analytics, I haven't done for about 2 episodes now, and I want to stay accountable. I want to stay reflecting on what's working and what's not. The metrics today is going to be from December 27th, 2023 to February 3rd, 2024. And starting with my YouTube, my views was 332. Watch time was about 3.9 hours. I lost 1 subscriber. My total subscribers was 115, and my top videos was what hashtag stock to buy during a recession, hashtag personal finance, hashtag investing, had 138 views, and the average viewer duration was 36%. The second video was how to invest in the hashtag stock market, with 45 views and an AVD of 29%. Third video was how to lower taxes, that had 40 views and a AVD of 48%. And then Fire Movement, how to retire 401k Roth IRA, how to create a budget, had 14 views and the AVD of 8%, this was my podcast. And then the last one was, if you could improve your life today, would you do it? Which had 12 views and the AVD was 87%. Now, my TikTok analytics for the same time period, video views were 2,679 views, which were a 35% decrease. Profile views were 122, which was a 44% decrease. I lost 4 followers, which was a 2% decrease. Total likes was 34, which was a 2% decrease. Comments, I had 13 comments, which was a 7% decrease. Unique viewers were 2,367, which was a 34% decrease. I had 0 shares, which were kind of surprising. Total followers, 304. Please follow my podcast. Thank you for listening to the Dorian Finance Podcast.